Everyone, and welcome to today's Energy Storage News webinar with Clean Horizon, the impact of Germany's ramp constraints and grid limitations on the energy storage business case. I'm Andy Colthorpe, editor of Energy Storage News and deputy editor-in-chief at Solar Media, part of the Informa Group. I've been doing this job for a fairly long time, just about long enough to remember the first time around that Germany was considered one of Europe's hottest and most exciting energy storage markets more than 10 years ago. Off the back of immense growth in its solar PV developments, Germany became a prolific early adopter and the industry pioneer of lithium-ion battery energy storage systems, or BESS. However, at that time, rapid saturation of the ancillary services opportunities available brought that to a halt before too long. As technologies, market development, and understanding of the multiple roles of batteries progressed, once we moved into the 2020s, Germany again became a focus for developers and investors. The depth of its power markets and continued embrace of renewable energy deployment are among the reasons for this. And once again, stakeholders across the European industry are defining Germany as perhaps the hottest market on the continent, although this time, of course, it faces competition for investment from the likes of the UK, the Benelux countries, Spain, Italy, the Baltics, and Central and Eastern Europe, to name a few. Its challenges or its evolution. So, despite the fundamental drivers of storage being in place, stakeholders in the German market are facing major changes in the way business is done, from policy and regulation to, as we will see today, grid operator perspectives. Navigating those changes will be key to development and operational success. That's why I'm delighted that in this webinar, Clean Horizons experts will help us understand how the business case for battery storage will be influenced by what we might loosely call the grid situation. Joining us today are Marcel Marquart, Clean Horizon Country Manager for Germany, and Salomé Perperot, Senior Consultant at Clean Horizon. As always, interaction with you, the audience, is very important to us. Please submit your questions for the speakers in the questions tab, or the Q&A tab, sorry, on the right-hand side of your screen. We won't be able to answer all of your questions in the time we have allotted today, but please rest assured, Clean Horizon will be happy to follow up and respond in full and continue those discussions offline. And lastly from me, before we jump in, this session is being recorded and will be available in a few working days' time on the on-demand webinar section of the ESM website, along with presentation slides. So, hi Marcel, hi Salomé. It's a real pleasure to hand over to you guys. And I think Marcel's going first, so I'll leave it in your very capable hands.
Yeah, so, hi, hello Andrew. Thanks for the introduction, and very happy to be here on this webinar with you. My name is Marcel. I am Country Manager Germany at Clean Horizon. For the ones who don't know us yet, we are a one-stop shop consultancy for battery energy storage. We are both a technical and a market advisor across 15 geographies in Europe, and I'm responsible especially for the German market. That's why I will be giving you the introduction of this webinar. My background, actually, I started in 2018 in the battery industry as for Fluence integrator, and then made my way via French IPPs and German developers to become this role within Clean Horizon. And I will be now giving you a short update about the impact of Germany's ramp constraints and grid limitations and how they impact the business case. So we will talk quickly about the regulatory context in Germany, look at differences also between DSOs and TSOs, just to get all of you on board and understand what we talk about in the aftermath. My colleague will then take you with a concrete example from the early development stage to your final grid connection agreement, and explain how these different steps will impact the business case. You will find out at the end then how limitations become the new standard and how this will be implemented in your projects. So to kick things off, grid in Germany is a bottleneck for BESS project development, as it's in a lot of European countries as for now. I just, to visualize this, I took out a slide on the right side. So I made a graph about how much BESS power has been requested to the grid as of now and how much is in comparison to the peak demand of Germany. And you can see that the 700 gigawatts of BESS grid access are in no relation to the roughly 90 gigawatt of peak demand. So most likely, as you can see, not all the BESS that requests grid access will be connected to the grid. So if you make your request as a developer to the grid, you might get refused, or you might, if you're not refused, become what we call a flexible connection agreement, or FCA. This one is an outcome of the EU reform for electricity markets that was later implemented in national legislation here in Germany, and it allows for a more flexible use of the grid as a scarce resource. So where we came from before was a fixed grid connection agreement. So you would, for example, ask a 10 megawatt connection and for injection as well as for absorption. And the grid operator will either tell you you can have it anytime you want, all the way around, 24/7, or if there was not possible, for example, if you were in a solar dominated region and there was 1 hour at noon where you will not be able to inject, you will just refuse it straight away because you're not able to inject and withdraw whenever you want. So the slightest constraint will lead to a refusal of the grid connection request. In order to improve that and to use the flexibility, the now in place regime allows for flexible grid connection agreements. So the grid operator can tell you you are allowed to inject and to absorb, but there's constraints to that. And these constraints might be very different from one grid operator to another, but he can allow you under constraints to still connect to the grid. And this FCA that he will provide is actually not something that you use in order to be quicker on the grid. So it doesn't give you some kind of head start. You don't get a fast lane access just because you have an FCA and somebody else asked for a fixed grid connection. It's a requirement. So it's the grid operator will tell you, take it or leave it. That's what you get. And you have to see if the FCA will work out for you in your business case. So now what actually is a FCA and a flexible connection agreement? What kind of conditions can we have in those? I took out 4 examples here of conditions we often see in agreements in Germany. The first one being injection or withdrawal limitations. So that might be the grid operator being in, for example, a consumption zone, industrial zone, saying you cannot consume during these hours because there's already a lot of consumption on the grid. Or on the other side, if you're in a PV dominated zone, he might say in summer during sunny hours, you're not able to inject or you're only partially able to inject to not overstress the grid. So that's a profile that can be more or less fixed depending on your FCA, and it will limit your use of your grid connection. The second constraint that you might face is a limitation on ancillary services. So just for a quick recap, ancillary services is, of course, services that you are compensated to help stabilize the grid in case of frequency deviations, such as FCR and AFRR. And the grid operator might tell you that you are not able to participate with your full power in these markets, but only with a fraction of this power. That will, of course, then have a negative impact on your revenues as for the other constraints. As the third constraint, we can see ramp rates. So that's a change in your power output. BESS, as you know, can change the power very fast, especially compared to, for example, gas power plants, nuclear power plants, or coal power plants. But the grid operator argues that a quick change in power might cause problems with the grids, might not be able to handle those. So he will limit the speed at which you can change the power you're inputting. So these ramp rates are usually given as a percentage of your nominal power per minute. So for example, you can change only with 5, 10, or 20% of your nominal power in 1 minute. So it takes you then, for example, 10 minutes to ramp up to full speed or ramp down in the other sense as well. The point here, that's the first one, is the order book freeze. So the grid operator might say, you have to communicate to me your exact schedule of injection absorption X hours before delivery, and you are not able anymore to change your commitment afterwards. So that will especially impact markets that are dealt with close to delivery time, such as intraday continuous markets. So now that you have a bit of an idea what kind of conditions you might find in your flexible grid connection agreement, you might think, okay, nice, I will look what are the FCA conditions in Germany, and then I will apply them to my projects. But actually, it's not as simple as that. There's not one size fits all in Germany, because as you can see on the right side, there's a lot of different grid operators. So in the colors orange, green, purple, and blue, you can see the 4 TSOs in Germany. And all the shades that you can see are different DSOs. So we have above more than 850 DSOs in Germany, which is a historical construct. And they all have very different opinions on what you think, what they think is the best condition to limit you in your use. So actually, you don't know what you get as an FCA before you make a grid request, because even with the same grid operator, 2 projects might have 2 very different constraints. So there's no standardization in this regard. But just to give you some tendencies on what you might expect, depending if you connect to the TSO or DSO level, they of course have a bit different structures and how they work. So the injection and withdrawal limitations are, for example, very common on the DSO level, because usually the scarce resource for them, it's actually the lines, the cables. And so this capacity is the one where they have to limit in some hours, unlike for the TSOs. For the ancillary service limitations, TSO will often apply them for big sites in order, if one site fails, to not have a too big outage and to be N-1 proof. The DSO might also apply them, not because he has so big projects, but because he doesn't have any intrinsic interest in ancillary services, because they are dealt with at the TSO level. Ramp rates are applied by TSOs between 6 and 20%. So the 4 TSOs agreed on these. For the DSOs, there is no such agreement. So we've seen anything from no ramp rate at all. You can ramp as fast as you want, down until 1% per minute, basically taking you 100 minutes to get to full power, and thus having a heavy impact on the revenues of the batteries. For the order book freeze, we saw it in some TSO agreements, especially because they argued that they have to manage the grid congestion process in Germany, which is called redispatch. And if you would change last minute, then it will screw their planning, and they would already have been designing the redispatch measures. So they don't want you to change too close to delivery time. It might be worth mentioning at this point as well that within the DSOs in Germany, quite a few of them belong to the E.ON group, and within the group, they're now trying to standardize these conditions. There is a draft online by SRNet, which the E.ON group wants to internally use for their DSOs, but there are still a lot of DSOs who are not part of this group and don't commit to this standardization. I will now hand over to my colleague to show you a bit more with real numbers, actually, what are the impacts. Salomé, stage is yours.
Thank you, Marcel, for setting the context, this particular context in Germany. So what I want to show you now is just taking a real example, an example of the developer journey in Germany, step by step. Maybe a quick intro on myself. So I'm a senior consultant at Clean Horizon, and I'm responsible of the German market analysis as well as the German price forecast for Clean Horizon. And additionally, as Marcel mentioned, Clean Horizon is actually working on the entire value chain of a storage project. So I also work on technical missions such as feasibility study for your project or support to procurement, and it's really useful to let's say make a bridge between the technical parameters of the battery, the physics, and translate that into economics, into a business model. So here, what I want to to show as an example is a developer that is developing a 50 megawatts for our project. So he already has knowledge about market trends, and he knows that the optimal battery duration for Germany is to go for a bit longer duration. So he has this idea to develop the project. Now he's in the first phase where he has a land plot that is secured. He knows the size, so he has maximized the battery project that can fit this land plot. So here it's 50 megawatts that can be fitted in the land plot. He's already starting to discuss with battery suppliers, and that's when he wants to build the first business model, its first business model. And so, Wellhead signing its connection agreement is already starting to have a need of a tailored business model. So of course, he wants to be able to model the sizing of its battery, 50 megawatt for our usable power. And he also wants to be able to model the degradation curve, so state of health of maybe its preferred supplier or of some of the supplier he's talking to. He wants to be able to implement the round trip efficiency of the battery into its business model to have this first business model. And those specificity are now specified to its project, but actually it's common to all storage projects. So really, the first business model will look something like that. It is key, of course, to be able to implement those parameters to build one, but those features are standardly modeled by all forecast providers now because they are common to all storage projects. And so here we have a business model for the 4-hour project where SOH and RT curves are already included in the revenue stack. The commissioning date is set to 2028, and the cycling rate has been also implemented, so 1.5 cycle per day in average, and up to 3 cycle maximum per day to match what a lithium-ion battery can actually cycle in order to respect its thermal management. So from the get-go, Wellhead signing the grid connection agreements, a first business model which is tailored to the project is already being built. And then the development of the project moves forward. The first exchange with the network operator are coming, and the exchange mentioned that there's going to be some condition to connect the asset to the point of connection, and we start to have a need of a second business model tailored to the project. And with those first exchange, the grid operator is already giving a slightly more visibility on what could be the potential constraint. So for the developer, he has the information that there will be a ramp rate in his grid connection. So he knows that the TSOs have recommended between 6% per minute and 20% per minute of ramp rate for storage. So might need now to model a 10% per minute ramp rate to have a new business model. The operator has shared that its participation to FCA and FCA will be limited to 25% of the power of the assets. So that's something to be considered. And the operator has also mentioned that there will be some limitation on injections, about in the first exchange about 1 100,000 hours. So now the business model has to implement those three new limitations. And so those are to be implemented all together. Those are combined constraint. And maybe for the audience that you can maybe guess or what could be the impact, the overall impact on the revenue of these three combined constraints. And I'll give you the results maybe in a minute.
Yeah. Thank you, Salomé. So you might wonder, how does Salomé do to give you the results of these impacts on the revenues? Actually, she used our in-house tool, which is called Cosmos, which we developed and which we also offer as a subscription model to possible clients like developers and IPPs alike. The tool works in the way that it simulates the battery or hybrid asset. So we input in the tool the functioning of the battery asset, technical features of storage. We already implemented ancillary services, electric price forecasts, and how the markets work. We also put some CapEx and OpEx assumptions in there already. So what you have to do only is then, if you have a hybrid park, of course, you have to upload wind and PV data. But if you have a standalone park, you can update just your flexible connection agreement. So you can individualize each market participation. You can import limitations on charge or discharge, and you can also impact ramp rates. And the tool will then optimize the BESS asset within these boundaries and give you output on the revenue streams, such as you can see on the right. That's an example that you can see where the revenue streams come from which markets, how does it distribute, and you also get a tweakable Excel business model with the results in there, and you can play around with sensitivities and different characteristics in order to find out what actually are the revenues of your project. And you can use that by yourself independently without having to go to a market advisor like us all the time. And now back, Salomé, what actually are the revenues that we lost due to the FCA?
And so if we combine the three constraints to our project that we are looking into, a 50 megawatt for our battery project, it resulted in an average revenue loss of 16% per year. So I don't know if the audience was close to that estimation, but what we see is that FCA can be impactful. And while it has always been key to model, as I mentioned, the energy sizing, the energy capacity, the degradation curves of your assets, the cycling rate, it has always been key. But now with FCA that are impactful, those are even more key to model for a business developer. And so I'd like to point out some interesting data because these constraints, this operational constraint, they work together and they are modeled all together. And having those three sets, three constraints as a set, it impacts how the battery will operate on the market. And so if we look, for instance, at the limitation on ancillary services participation, it was capped at 25%. But yet it did not result in a 75% of loss in the balancing revenue that are displayed here in orange. Actually, those balancing revenue, they have been reduced by around 60% per year compared to the unconstrained business model. And so it's interesting to see that it's not about multiplying an unconstrained revenue by the limitation, but it's about being able to model really how the battery operates and how it can capture value even with this constraint. Because maybe in the case of unconstrained revenue, the battery would have bidded 100% of its full power on one time slot. And then with the cap, what it will do is that it will bid on multiple valuable time slots, slightly less valuable, but if there are multiple time slots that are valuable on the same day, the battery can still mitigate the impact of this participation cap. And another interesting data that we can note, if we take a look at the split by market, and if we talk about the trading revenue coming from the day-ahead participation and intraday participation in blue, in 2028, the trading revenue are even higher than the trading revenue of the first business tailored business model. And why so? Even considering this constraint, it's because the battery was able to shift its operation from maybe more balancing services in the case where there was no constraint, to more operation on day-ahead and on intraday. And that is why those trading revenues specifically in 2028 are actually slightly higher. And so overall, if we consider the trading revenue from this case compared to the previous unlimited cases, we have about 10% per year loss when considering those combined effect of the 10% per minute ramp rate and the 1,000 hour of injection limitation in the business model. So now that's one example, but the impact will actually depend on project parameters and on market trends. Maybe we, as developer will want to have a certain sense of what can be the impact of each of the constraints that we are talking about. And so for ramp rates, the range that we see that TSO recommend, as mentioned, it's between 6% per minute, so 15 minutes to reach full power, and 20% per minute, so 5 minutes to reach full power. And those ramp rates, their impact will depend on battery parameters such as the battery duration and the battery cycling. And so long duration battery or with high cycling rates will be less impacted by the ramp rates, because when you have a long duration battery, it will not change its position on market at every time slot. For instance, a 4-hour battery might be discharging for 3 hours or 4 hours straight. And that way, the ramp only impact the first time slot to ramp up, and then the last time slot to ramp down. So it mitigates the impact overall, whereas a short duration battery is likely to change rapidly from one set point to another quite frequently, and thus the ramp rate impact will be stronger. For balancing services cap, of course, it can range from 0 to 100%, even if the 25% can be common. And this constraint will impact mostly the beginning of your project. So the date of commissioning will be one project parameter that gives you a way of how impactful this limit will be. With early date of commissioning, 2027, 2028, the impact will be stronger as there are a lot of revenue to be captured on the ancillary services. But as we progress and as battery enters the market, we know that the prices and the opportunities on those markets, which are quite shallow, will decrease, and therefore the cap will be less and less impactful in the future. And then regarding hours of limitation, that's where it becomes tricky, because hours of limitation they are very vary. There are a variety, so it could. Of course, they have a direction. It's either a limit in injection or in withdrawal for the battery, or it could be both. There is the number of hours overall that can change from one grid connection to another. And there is also the position of the hours of limitation throughout the years. So do we have a knowledge on whether it's concentrated on a certain season? Is it more linked to a PV production, or is it more linked to wind production profile? And so it's a set of those three parameters that will have more or less of an impact on the battery project. And the outcome of this constraint also depends greatly on the market situation. So if there is multiple markets that provide high opportunities at different time of the day, then this constraint will have a limited impact on your business case. Because the battery will be able to dispatch otherwise, to shift its operation and still capture high revenue. But then if you think about country where there is not a lot of market open for storage, or if those markets do not have the same amount of opportunities, then this type of limit will impact strongly the battery business case. And still moving forward in the development process of this battery storage system, finally, the developer is signing its grid connection agreement, and he knows now the final terms of its contract with the network operators. And within this contract, there is now a frame limitation. So in our example, the final grid constraint in the connection offer actually states that the ramp rates can vary between 10% per minute, as was modeled before, up to 20% per minute, which is slightly better for the business case. The participation cap of 20%, 25% in the FCO and AFR market is confirmed in the grid connection agreement. And then regarding the injection limitation, the operators have shared more information about that. And actually 500 hours of limitation are expected up to 2035 until there is a grid reinforcement, and then no more limitation are expected. So throughout the process, if the developer finally needs another tailored business model. And so here he has its final business model with the blue line, and actually with those new set of constraints, the revenue has increased by around 8% per year compared to the former business model. And so what we see throughout this journey is that before it was one tailored business model for one project, but with FCAs, we now come to a world where actually there is multiple tailored business models that are needed for one same project, and there is actually a range of revenue instead of a one fixed total revenue for your battery project. And as there is flexibility in the connection agreement, the developer has to also show some flexibility skills and adapt to the level of information he has. And we've talked about revenue, but the developer has a full overview of its project. It also has, of course, to consider the cost, CapEx, the maintenance costs that are applied yearly, the performance guarantees for its SOH and RTE curves, the product warranty of all the equipment, the cost of the supply of the auxiliary power for the battery, land lease, and so on. And so each time he has a business model, he will compute the profitability of its project and see how it shifts. And so at the end, the final limitation in its grid connection agreement resulted in 2.5% of loss for the internal rate of return. And so it is important to be able to model that to have a real good estimation of the profitability of the project.
Maybe now to go from opening from the business model to a financial close. So we saw the different characteristics of the revenue stack that Salomé presented and how it impacted your business model. But now, if you want to get to financial close and actually realize your project, how will you do so? So there's two players we want to pay attention to. First one being the route to market. So route to market players actually are also new to FCAs, like everybody is, especially in we now have a lot in the development, but not a lot actually in the implementation or in the execution phase. So as they have limited experience in how to operate those yet, they are maybe unable to estimate long-term revenues for these FCA cases, as they're very different from each other. And so a toll will be hardly given from route to market providers, or if it's with a high safety margin for them, so that might make the product less interesting. And we can see shift more towards floor agreements, where you can see a part that is actually conditions where we can assess easily. For example, maybe might be an hour constraint on noon hours that the route to market can basically quantify with a higher degree of certainty. And then there's an upside on conditions that he does not exactly know yet how to implement them, and this will be then shared between the route to market and the owner of the plant. Second, then, if you want to finance, of course, you need somebody to provide you the credits or the lender. Actually, it's similar to the route to market in the sense that they have now a new level of uncertainty. And uncertainty, as you know, is not something that banks especially like. So the FCA conditions sometimes might be not exactly very concrete. They might be a bit vague. Sometimes you can see a sentence that says, like, you might be limited in case the grid requires you to do so, but that might be not something you can easily forecast. So there is the need from banks for higher sensitivities and the risk associated to each market, for example, on the DSCRs. So what they often do is require several sensitivities and have a more complex analysis of the required business case, rather than just one single line. And maybe eventually, depending on how hard the conditions is, you might just end up with a lower gearing because lenders don't want to commit on too unstable FCA conditions. If you want to understand with your route to market supplier how to contract these kind of conditions, you can also reach out to us. I mean, I mentioned at the beginning, we're not only market advisor, but also technical advisor. So we also help developers and IPPs in finding partners for their project. So that might be EPC integrator partner, but also route to market partner. And we can assist on looking at the value sharing conditions in the contract, the market strategy that was chosen, and also the flexible connection agreements, how they are implemented in the contract. We can help with transparency and performance. Clean Horizon actually acts as a benchmark for revenues for premium assessed, so project assessed basis. So we really model each project one by one and make a benchmark, not a general benchmark that it was used in the past. And we can also help with termination clauses that are linked to these performances. So if your route to market supply was underperforming for several months in a row, you might have first a session where we analyze differences between our benchmark and theirs, and then see if you want to continue with these route to market suppliers. I think that would be it from our side for now. I hope you have some questions for us, which we can deal now in the aftermath. We will be happy to assist you, of course, in your project. But if you have questions on the FCA and their impacts, feel free to put them in the chat. And I think Andy, we can find some that we actually can address now.
That's great. Thanks very much. And let's leave that slide up for a few seconds more, please, admin, and just so that if anyone does want to get in touch, they can do that. Although, obviously, you can just go on your browser and look for Clean Horizon, and you can obviously find Marcel and Salomé on the Clean Horizon website and, of course, on LinkedIn. We have already got lots of great questions from the audience, and we have good amount of time to tackle them as well. So just before we get into those, I'm going to exercise my editorial privilege and ask our speakers a couple of questions myself, if I may. And we'll kick off with that and then go into the audience questions. Now, for the audience, please feel free to keep asking your questions and putting them in. At this stage, we may not be able to get to them during this online session, but you will be able to connect Clean Horizon afterwards. They will receive your contact details and we'll be able to continue those detailed discussions offline. But in the meantime, yeah, Salomé and Marcel, thanks a lot for your great presentation. I don't know which one of you wants to go first with tackling these questions. Yeah, if you don't know what the grid connection agreement terms might be until a certain stage of development, could the agreement make a project unviable? And as a second part of that, is it possible to negotiate or discuss the conditions that the grid operator hands to you? Maybe Salomé, you first, I guess.
Yeah. So of course, what is key throughout the development is to at some point add some frame on those limitations. The uncertainty just gives a broader range of revenue that is possible for your project, and at some point it can have an impact in the assessment of the profitability and thus be difficult to move forward. I think it's okay not to have full visibility at the get-go, but moving forward, more and more visibility and be able to frame and to reduce the uncertainty on the limitation will be key.
And to the second part. Oh, sorry. Yeah, go on, Marcel.
Yeah, I want to connect to the second part of the question, which was about the negotiation with the grid operators. So actually, the upside and downside of having so many different TSOs and DSOs is that actually you have quite a variety of different answers to the same question. So while some DSOs do not really want to participate in discussion and just give you the short answer, which is no thanks, that's what you get. Some others actually are also willing to discuss. And I think if you come in well prepared and tell them, look, there's some conditions which will make the project viable for us, but we are willing or able to assist in making the grid more stable within this framework and give some actual data. I think you can maybe get some positive feedback, and especially, as Salomé said, try to precise as much as you can the conditions, because the more vague they are, the harder they are. First for us to simulate, later for a bank to assess, and the more risk margin will be put on top of it. So make sure to get the most precise conditions as you can.
Excellent, thank you. And yeah, with all of that in mind, is it still possible to standardize BESS project development, do you think?
I think there are some part of the project and of the development that you can still standardize. I mean, you can have sizing that is quite optimal that you want to implement in multiple projects. And even though the grid connection terms for all of this project will be different, you have already a starting point in your development. You can also have some partners that you work with, maybe standardize slightly or at least have a short list of suppliers that you work well with. Your advisor also, if you keep the same, they will be able to to get used to the FCAs, to know already that this is a real topic in Germany. It will come for each of the projects in your portfolio. So having partners on the long term as well is a way to standardize, I think, the development of projects in Germany.
Yeah, of course. And I mean, I think as we saw, as I was mentioning in my intro, Germany was something of an early adopter in terms of energy storage technologies. And, there's been a lot of waves and roller coasters and however you want to put it since then. But I know that obviously Clean Horizon, I think Cosmos models, and I'm not doing an advert for you guys here, but I think it models like 15 different markets by country and region in terms of the revenue. So when we look across Europe, how similar or different do you think these grid connection dynamics are in comparison with other markets in Europe? And, I think seeing the first signs of, I don't want to suddenly just jump all over the world, but like we're suddenly seeing the first signs of flexible connection agreements. I think there was some stuff out in New York for distributed generation as well. So it's something that's top of mind for a lot of the grid operators, whether at transmission or distribution level. But from your point of view, how does that compare with other things that you're seeing in Europe?
Yeah, good point. And Andy, I happy to take on this one. So we are, as you mentioned, we're active in most European BESS markets, actually relevant. And so we see that Germany on this point is, I would say, a precursor, an early mover, call it whatever you want. So there's the conditions that we see in Germany are still somewhat special if you compare to other markets. Other markets, of course, have grid codes where they also define such conditions, such as ramp rates, but they are uniform and not tailor-made for each project. And they're not as creative as I would say, as German TSOs, maybe because most countries just don't have so many grid operators. But I think what we can see is that this actually will become a trend also in other geographies. I think BESS will play a role in this, so to take into account the grid situation, the congestion, and so on. And I think we also see that already in France. I think Salomé, you have the input on this one, but we already have some seasonal conditions similar to that in the French market.
And I mean, Marcel, you said it. I think, I agree that Germany is kind of an early mover on that part. I think mostly because the storage sector in Germany is quite advanced among the other European countries. I mean, operational battery in Germany and I'd say in the UK are where you find already the most operational battery and a large pipeline of projects that are under development. So that's why those constraints are already on the table for Germany. But with other countries where we see the storage development that is also increasing, that will eventually come on the table. And for instance, in France, indeed, there's already a flexible connection scheme that has been launched end of last year, which is about 2 operating templates for storage specifically to connect your assets in France. There is one operating template with injection limitation and one with withdrawal limitation. And you can find where those templates apply in France, in which zone they apply. So if you want to connect in a certain region or in a certain location in France, you have a map online that is already giving you the information about if it's the operating template that will be applied and or if it's the withdrawal one. So the map actually for withdrawal template is will be shared this year. And so what is good, I think, and easier for France is that those templates are set in advance. They are known and shared, and you can see the zone in which it applies. It's a bit easier in French because you have one TSO and one main DSO, whereas in Germany, I think because of the grid context, it's not possible to to do such a similar thing. But indeed, the constraining grid agreement, it's going to be a topic in the future that is broader than just Germany, I think.
Yeah, sure. And, I think we don't necessarily know yet what it might look like in other places, but it seems like, yeah, from what you say, it's going to be something that is adopted. And I mean, I suppose, you mentioned there's obviously it takes some agility from the asset operators and route to market optimizers in making all of this work within that new context. But in some ways, if that's inevitable, is it ultimately from a big picture perspective, if we flip it on its head, is it maybe a good thing for the adoption of renewables and flexibility resources as, these kinds of schemes will end up putting storage into action when it's actually needed, or do we not really see that much of a correlation there? Ultimately storage is there to earn revenues, but it's earning revenues because it's solving problems, really, I guess, isn't it?
Yes, exactly. I think you pointed out the two sides of the same medal, right? So there is a lot of revenues for the operator. That is, of course, something that we don't appreciate if we're owner of a battery asset. On the other side, you can, if you actually support the grid, you can increase acceptance on grid operators level to install more BESS, which, as we saw, is the bottleneck right now. I don't think that all of the measures that are taken or that are proposed always help the grid. Like some are just also to make the grid operators' life maybe a bit easier. I'm not sure that they directly always linked to some involvements, but in any case, both politically speaking for batteries to make the case that they're actually helping the grid and not just here to earn money for the investor, and also for the grid operator to say, I can incorporate them into my system. I think it does good to the battery business case because you will be able to develop more projects, even if they come as a slightly lower IRR.
Yeah. And to jump on that question as well, of course, during this session, I've shown business models that are impacted and revenue losses. But at the end, I also think that of course it's flexible connection agreement and those limitations are seen a bit badly for the on a developer point of view. But I think it's also helping to move forward with the storage industry because we wouldn't be in a world where it's either a no connection because there is a slight constraint on the grid. So I guess it's also helping to avoid to being stuck into a world where there is no more connection of assets as before we have grid reinforcement, etc. So those limits are impactful, but they help also to move forward and to connect assets instead of being stuck. So that's a way to see it as well.
Definitely, I think in context of some of those wait times that otherwise some of the assets might be facing, of course. Yeah. So over to questions from the audience. So again, thank you so much to everyone who did of course, thanks for joining us and also thanks for putting in the questions. So the question here from, I hope I get your name right here, Ijeoma, thank you very much for your question, who asks, given the varying constraints that could be applied to different BESS developments, how do you fairly benchmark BESS revenue performance across the market? So I guess it throws in some extra variables, really, doesn't it?
Yes, exactly. I think I will take this one because it's linked to the slide I presented on the route to market support. So back into last year, not that long time ago, but there was basic benchmarking was done in route to market contracts by either just taking some public available index, which is generic across all projects, or taking a formula that was something like day ahead spread times weight X plus AFR price times weight Y, make like a formula that you use to approach revenues. But we see that actually recently, especially in 2026, there is a higher need for benchmarks that are closer to the actual project, both because they provide a like if they have less of a safety margin because they're closer to the actual revenues. Otherwise, you have to say, but what if, and my project is different than the general index. That provides a more precise and as well a higher benchmark, and that helps you first in your route-to-market contracts, but especially in financing. So what we do as Clean Horizon is, as we are not an operator ourselves, so we don't have any conflict of interest, but we provide our own benchmark. You have a public index on our homepage which is generic. But we also do make asset-specific benchmarks. So we use the Cosmos tool we provided, we showed before, and we use past data from markets, for example, Apex and Nord Pool markets, and we feed it into the tool, so we get the revenues an asset should have made in the last months, take into account your exact asset criteria like RTE, your aging factor, your FCA conditions, might it be limitations or others, and so we actually build a benchmark that is made for each project, and that helps you assess your performance rather than taking a generic index.
But also as a general I think improvement, and especially in Germany where it's a more mature market, I think more and more stakeholder, whether they're advisor or route to market, are sharing index online, and I think it's also a good thing, even if most of them are not tailored to FCAs. It's just the first step on providing insight of performance for a battery, and as this need of FCA benchmark as well is growing, I think that will be just the second step for everybody to give more transparency on that.
Excellent, thank you. And so we have a couple of questions from audience member Matthias. So Matthias, I'm going to pare this down to the first question you asked, I think, in the interest of time. But thank you very much for both questions. So Matthias asked how the slow ramp-up time impacts FFR, so that's fast frequency reserve, and FCR, so that's frequency control reserve, BESS applications, especially for dedicated high power assets, which Matthias infers may be, below 1 hour duration. So that's probably, dare I say, the slightly older fleet, really, I guess, of battery storage systems. But yeah, what's the impact on those kind of ancillary service providing battery storage assets?
So I think I've shared some information on that. So if you would have to compare a business model for a short duration asset without any ramp rates, and then do the same business model with a low ramp rate, that will have a stronger impact than the 10%, than the 16% average loss of revenue that I've shown here. Just because, as mentioned, the 1 hour asset will, its operation is more straightforward. It will target the most valuable time slot, and then if the ramp rate is implemented, it will have to so the short duration asset, it changes set point usually from 0 to 100% on one time slot, and then it will have to shift more its operation compared to a longer duration battery, which might stay stable for consecutive time slots. So it will have a greater impact overall.
Maybe I just to add one point, besides the fact of Salomé's analysis of the impact, is also that the ramp rate does not always apply on all markets. So you might see that the operators will give you a ramp rate, but he will specify that it's only applying on the wholesale markets. So he might exclude ancillary services from these ramp rates, saying that, okay, if you have a ramp rate that is too restrictive, you can of course not provide the service. So they might exclude it from the service. So that there's a difference here. Some do apply a ramp rate on all markets, and some apply a ramp rate only on wholesale markets.
Yeah, it will. Yeah, indeed. Well spotted. And
excellent.
yeah.
And I think possibly, yeah, there may be a much lengthier discussion that you guys could go into offline with Matthias around, particularly around duration and these high power assets. But as I said, yeah, we'll have to move on, and we'll do a couple more quick questions if we can, folks. So, Ying Jan, thank you very much for your question. Kind of us too, but I think fair question to ask. Which constraint do you see as the more punitive, so the more punishing? And of the 1,000 hour random that you described, Salomé, what is the minimum or maximum level, given the limitation can happen anytime?
So the good question. I think as an order of magnitude, below 300,000 hour, overall 300,000 hour of limitation, it's still possible for a battery to be profitable, even though we have to assess it project by project. But I mean, there is a workaround. There is a possibility of shifting operation over this threshold. It becomes more and more complicated because it's constrained a lot the battery operation. Yeah, I think that's an order of magnitude.
Maybe also for the question, so I think there was pointed out also, just to make sure, so the hour limitation, there's a big difference in having no information at all on when it will apply and having some idea. Because if you just have a number of hours and you don't know when it will happen, what we have to do usually is take out the 1,000 best hours, because otherwise your lender will say, okay, but what if it's not a random hour? Like, I can simulate random hour limitations, right? But then the lender will say, but okay, but what if the limitations fall in hours that actually are quite interesting for the batteries and then have a bigger impact? So we can make several simulations, one with like, just take out the best 1,000 hours. That would be very conservative, but lenders will prefer that one. Or take a random approach, like a Monte Carlo simulation with several random hours. The best, of course, is if you give information, if it's, for example, is it a PV dominated zone? And we can at least put a PV file behind the hour of limitations, and we can limit around noon in summer and so on. That gives a more precise estimation, and that has a big impact. And so 2 simulations with 1,000 hours are very different in impact, depending on if we know which hours are concerned, then we can nail it down, or if we have to assume, for the sake of conservatism, the best 1,000 hours. So that is a big difference also.
Right, yeah. So I guess a combination of kind of risk mitigation and kind of like the real world assessment of what you may realistically see, I guess. Yeah. Cool. Okay, thanks very much for that, guys. And then final question from Alex. So thanks for your question, Alex. Asks, given the incredibly complex TSO, so transmission system operator, and DSO structure, as we heard, more than 900 of those in Germany, are investors still keen to finance battery storage schemes in Germany? And I think one thing this question slightly hints at, I mean, from what I've read and what people have told me from the industry, and obviously I'm a journalist and not a participant, so don't take this as advice in investment by any means, because I'm not taking the same risks that a lot of you are. But I am hearing, you know, obviously that people are still looking to invest. And yeah, while some of these workarounds make things more complicated, definitely the case. However, I think this question also does hint a little bit that, you know, the ramp rate constraints and the grid limitations are a huge part, but they're not the only part. We're also seeing things like the grid fee reform process coming through in the Bundesnetzagentur, you know, various other things that are in play, the flexibility assessments that the European Union is mandating that countries will put in. So yeah, obviously, guys, please correct me if I'm wrong on those things having a bearing, but just wondered, maybe as closing remarks and as a final question, how you guys are seeing what developers are coming to you with, or what optimizers are saying about the market landscape in Germany, and, you know, in a combination with what you're hearing and with what you're analyzing, really, I guess.
Yeah, thanks, Andy. I'm impressed you nailed the pronunciation of Bundesnetzagentur. Good one. Yeah. So exactly. I think that's also where the question of Alex is leading. We had actually the situation earlier this year that investor appetite was put on hold because the regulation authority, the BNetzA, put the possibility out there that they might apply retroactive grid fees. So before, Germany was seen as kind of a safe haven for investors because Germany didn't apply any retroactive changes to investments in the overall infrastructure sector. So there was always kind of safe and secure to invest in Germany, but this one put a question mark behind this the status. Most recently, the Bundesnetzagentur confirmed that they will not do so. They will only apply these grid fees, especially on capacity, only for battery projects that take their FID official announcement from them. So they should have taken into account these grid fees. But so to come back to the question of Alex, I think the appetite for investors is still very high in Germany. On a project basis might be very different. If not every project will see like people running on it, depending on the FCA conditions. But in general, investment is still very positive in Germany, still very good IRRs and very stable. The only matter was like the grid fee reform. There's now a bit more clear, even though we still have the dynamic grid fees, which will come online between 2030 and 2033, and which we're a bit uncertain about how exactly they will impact, but at least they give also not only a fee, but also opportunity to make revenues based on grid fees if you act in a grid-friendly way. So I think now that we know that the capacity grid fee is really low compared to what some might have feared, and is not retroactive, I think the appetite is still really high for the German BESS market.
I agree that I do think the appetite is still there, and we talked about business model, but Germany benefits also from let's say mature markets that were open to storage for some times now. Also dynamics, I would say, a route to markets landscape where there are multiple route to market available that are still willing to trade the battery and to offer commercial terms that is quite good. So business model, it's a starting point, of course, and a key point. But there are other steps to validate and to go to the final investment decision. And I think there are still appetite because market in Germany is still profitable even with those constraints and with those uncertainties. So, yeah.
Excellent. Okay, folks, thank you so much. We have run over time a little bit, but that's sometimes the case when the conversation is compelling and enjoyable at the same time. So I do really want to thank Clean Horizon, of course. Thanks so much to you, Salomé. Thanks a lot, Marcel. It's been a real pleasure working with you both.
Thanks,
Thank you, Andy.
Thanks for your time.
No problem. And yeah, finally, say most of all, thank you so much to the audience that joined in, both whether you asked questions or didn't. And if you did ask questions, then, hopefully you can continue those conversations offline with Clean Horizon. But yeah, big thank you from all of us here at Energy Storage News. We hope and look forward to seeing you next time. Thank you so much.